Islamic banking is very much common in today's world. Almost in all parts of Muslim world and in some parts of the non-Muslim world, we see the presence of Islamic banking. Today, it is estimated that around 300 Islamic banks are operating in different parts of the world with market capitalization of around 15 billion US dollar. And if we talk about the total assets of these banks combined together, then that will again amount to around 300 billion US dollar. And in terms of deposits that these Islamic banks hold today with themselves, the total amount of deposits are around 250 billion US dollars. As compared to the total or mainstream financial system or market, these estimations are very small, and Islamic banking market can be considered as a niche market. But again, the thing is, this market is growing tremendously at a very high rate of around 10 to 20% per year. So, it is important for us to understand what are the essentials of Islamic banking system. This lecture is basically is a continuation of what we presented earlier in first two lectures, in which we explained that Islamic banks are basically part of Islamic financial system, and the major norms that we normally keep in our mind when we talk about Islamic banking are also explained in lecture number 2. Here we talk about how these Islamic banks are different from conventional banks. Now, what is a bank? Conventionally speaking, a bank or the banks around us have a very much rich history of more than 1,000 years. The traditional job of bank is to accept deposits from the savers on the one hand, and to issue loans to the finance seekers or the borrowers on the other hand. Now, essentially these two contracts, one is between the bank and savers, again another one is between the bank and the finance seekers or the clients. These both contracts are based on loan, and what the bank is giving to depositors because of the contract they have with them is interest. On the other hand, what the banks are charging their clients because of the funds they have extended to them is again interest. So, we see that in the conventional framework, the bank is very much involved in offering interest to the depositors and charging interest to the borrowers. However, as we learned in our previous lectures that Islam categorically or very much clearly prohibits every form of interest. That's why these Islamic banks have to design their products in such a way so that their contracts do not involve interest in whatsoever form. Before moving to explaining what is Islamic banking, we have to understand one thing from a very much market point of view. What are the benefits that we are expecting when we introduce a new banking system? Because the conventional banks, as we see today around ourselves, that they are efficiently working. Now, in the presence of these efficiently working conventional banking system, if we want to talk about a different banking system, which is Islamic banking system, we have to expect some sorts of benefits to the market. Now, I can tell you about at least 3 benefits that we can expect from introduction of Islamic banks. Number 1 is completeness of financial market. When we offer a range of new financial products or services to the market, obviously that will contribute to enhancing customer choice in the market, because customers will have then more choices for them as compared to before. And second, this introduction of Islamic banking to the market will also enhance competitiveness of market. In other words, financial market already has conventional banks. Now, if Islamic banks participate in the market with their types of products, then this will again make the environment much more competitive than before. Again, competition always benefits customers in terms of their surplus or in terms of lowered price and enhanced services to them. Third type of benefit we can expect from this introduction of Islamic banking to the market is basically in terms of Muslim investors' taste and preference. Some Muslim investors and savers or finance seekers are very much concerned about one thing, that is the purity of their financial life. They want their financial life to be in conformity or in accordance with Islamic rules and regulations. Now, when they enter into financial market, if they have for them some financial products and services which are free from all sorts of interest or un-Islamic elements, then they will be very much encouraged to participate in that market. Thereby again the financial system will become more active and competitive. These are the benefits we can expect. Among other, there could be many other benefits, but these are the prime benefits that we can expect from introduction of Islamic banking to the already efficient banking market. Now, the essence of Islamic bank can be summarized in 3 points. They are: number one, Islam prohibits interest in every form. This prohibition came both in the Quran and also in the Hadith. So, Islamic banking products are free from interest. Number two, when conventional banks design their products, they always consider efficiency. They want to achieve efficiency. However, Islam talks about equity in addition to efficiency. In other words, while efficiency is very much important, as a consideration, but equity is also an important issue in the eye of Islam. So, we see that when Islamic banks design their products, they also follow certain mechanism in which parties can share their risks as well as returns, and we can expect that this sharing of returns as well as risks will enhance the equitable distribution within a society. And the third point is that Islam does not allow investment in certain products which the products themselves are not legitimate in the eye of Islam. For example, although I am not consuming alcohol myself, but I am not allowed to invest my money in production of alcohol or in distribution of alcoholic products, because alcohol itself is basically not permitted, not acceptable as a legitimate business within Islamic framework. So, we see that we have to design our banking products within Islamic banking framework, taking these 3 points into consideration. Now, how can we proceed then? The process of introducing new financial products within an Islamic banking framework is not very complex. What we do first is to remove all elements from the conventional banks or banking products which do not conform to Islamic rules and regulations. However, we can keep those parts or those aspects of conventional banking products which do not have any contradiction to Islamic rules and regulations. And one thing we have to keep in our mind again when we talk about Islamic banking, when we design our products, is the fact that while Islam considers the legitimacy of the goal very highly important, it also emphasizes on the how do we do something on this part. In other words, if somebody, as an example we can take this, that somebody is planning to help poor people. Now as a goal, as an objective, this is a very much acceptable and legitimate goal. However, if you snatch money from the rich people and then you give away those money to the poor people because you are helping poor, you see the means or the method you are helping poor is not acceptable, because robbing people of their wealth or snatching people to take money from them is not acceptable in the eye of Islam, although you are using those money to help poor. So when we design banking products, we not only talk about the efficiency and the purpose of the banking products, we also take care of how we design it, whether the designing process itself is according to Islamic viewpoint or not. Okay, so we have already learned that we can keep those elements of conventional banks like fee based products. You want to transfer money from one place to another, there is no involvement of riba here, there is no involvement of interest here, so you can keep this type of services within Islamic banking framework as well. But as long as a product of a bank or an instrument of a bank or a contract of a bank involves interest, whether directly or indirectly, we have to replace that product with another contract which does not involve any interest. So we see that Islamic banks today have to find out a way in which they can have relationship with savers on the one hand and the borrowers on the other hand, which do not, this relationship cannot involve interest. So the loan as a business contract is not available to Islamic banks, because Islam does not allow a bank to charge anything extra on loan, and it does not allow a bank to give anything extra on deposit, and deposits are essentially loans given by the savers to the bankers. So what else Islamic banks can do? This is the important question. So when we consider different contracts, we see that there are at least 3 different types of contracts available to Islamic banks, which can be used as a basis for designing banking products within Islamic banking framework. So the business contracts that are available to Islamic banks can be divided into 3 different types. First type of contract is known as partnership contract between the bank and the savers or the depositors on the one hand, and between the bank and the client or the finance seekers on the other hand. This partnership is of 2 types. In Islamic banking terminology, we call them, number 1 is mudaraba. Mudaraba is an Arabic word, and the meaning of mudaraba is profit sharing agreement between 2 parties. In a different lecture, we will try to explain how Islamic banks develop a product on the basis of this mudaraba, and also you can understand mechanism of mudaraba if you go through the lecture sheet within your module. But the basic idea is very simple, that according to mudaraba, the bank and the depositors agree to start a business, which is the banking business itself, on the condition that one party will give money, the savers are giving money, the depositors are giving money, and the other party will give labor and expertise. So the bank is giving its labor and expertise to conduct the banking business. Now, after a certain accounting period, if there is profit which is coming from the banking business, these two parties, meaning depositors and the bank, will share this profit according to a pre-agreed ratio. This ratio can be 30-70, could be 40-60, could be 50-50. There is no prescribed rule for it. It is left to the negotiation power between two parties. In other words, it is left to the market condition depending on which party is stronger in terms of negotiation. On the other hand, the bank can again form another mudaraba partnership with the finance seekers, clients, right, business people, on the condition that if there is a profit after a certain period, these two parties, meaning bank and the business people, they will share their profits according to again a certain profit sharing ratio. And this difference between two profit sharing ratio will constitute the part of the profit for the bank itself. Now, if in case of loss, the loss will be totally absorbed by the owner of the fund. In case of the first contract between depositors and the bank, the loss is absorbed by the depositors, and in case of the contract between the bank and the business person, the loss is absorbed by the bank itself. So, this is the simple contract of mudaraba. Second type of partnership is known as musharaka, which is slightly different from mudaraba, which means profit and loss sharing contract. In contrast to the first mudaraba principle, here both the profit and loss are shared by two parties, because here both parties contribute to the capital. So, bank can give 50% of the capital and the business can contribute another 50% or any other percentage according to their agreement. And again, in case of profit or loss, these two parties will share their profit and loss. This is the partnership agreement that is available to bank. Another type of agreement or business contract which is available again to the Islamic banks is sale contract or trade contract. So, what Islamic bank can do is to sell something to the clients with certain amount of profit, right, and then the business or the client can repay the total amount in installment, say 10, 12, 20 installments. Suppose a business enterprise wants to buy a bus which is going to cost 20 lakh taka, but the company does not have that amount of money with it. What it can do, it goes to bank and the bank sells the bus which is worth 20 lakh taka to the business organization, adding 1 more lakh taka as profit, and then the business organization repays this 21 lakh taka in 20, 21, 30 equal or unequal installments. So, this is sale contract, which is normally known as murabaha contract. This is very much popular within Islamic banking environment. And the third and last type of business contract is ijara, which is very much familiar to us, because the meaning of ijara is leasing, and leasing is a very much legitimate contract available to Islamic banks, and leasing is not uncommon in our society, in which one party leases a certain tangible asset to other party for a certain period. A bus can be rented to bus operator. So, for example, a local bus operator can an Islamic bank for a bus. The bank owns a bus, it gives that bus to the operator on lease, and the operator will pay certain amount of rental in each month. So this is the simple ijara or leasing contract. So what we have learned from this lecture is very simply that Islamic banks have to design their products according to the rules and regulations conforming to Islamic Sharia, and we saw that Islam does not allow interest in any form. So Islamic banks have to design their products in such a way that they can avoid all types of interest. I hope that things are very much clear to you, and if you go through the relevant lectures in your module, you will understand it much better. Thank you.